Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with probably who won't be on, Bob Iacchino, having internet problems at his new house. How's everyone doing today? Good afternoon, Patrick. Happy Topping Tail Tuesday, George. Good afternoon, Jacob. Good afternoon, Donald. Howdy, Happy Jack. Are you becoming a regular, Happy Jack? What's going on? Hey, Connor. Jason Copeland. Good afternoon, Mike and fellow chatters. Well, thank you for jumping in the chat, Jason. Glad to have you here. Sashi's got his time frames mixed up. Good morning. Clarified with afternoon. Thank you. Sashi. Hello, Martinez. And the people hiding in the background, thank you for being here. Let's see, just had a nap, feels like morning. Well, I hope it was a good nap, Sashi. You know, we should have more nap time. Regular, well, thank you, Happy Jack. I appreciate everybody that tunes in on a regular basis. I really, really do. So we had a barking. He was barking this afternoon. Interesting quote with him: to pause, inflation must be convincingly back to target. To pause, not to pivot, to pause. Gives me a moment of pause. So inflation must be convincingly back to target before the pause? Well, we shall see. I mean, I think the market's expecting a little different than that, but thought that was a little interesting thing from Barkin. What is this? George, portfolio 33% dividend stock, 60%, 66% cash. Let's go. I don't have a problem with that. You got some cash free for good investment opportunities. You know, if you're not looking for anything in the super short term, you can always put it into very short term bills also. Or, like, if you're an Interactive Brokers, they actually pay a decent return for parked cash. They actually do. It's not bad. It's not as good as some of the bills you can get, but it's not bad if you don't want to do anything. It's another reason I like Interactive Brokers. Again, I get nothing from them. Don't get, they're just one of my brokers. So, bull market started by the dip. Oh, Coco. Oh, Coco. We're still in tactical trading, Coco. And we can get ups, we can get downs. Hello, Options 22. All right. So, if anybody else sees anything different or anything interesting like that Barkin said or anything else you want to touch on, please put it in the chat. Hey, Nas Industry. All right. All right, tomorrow, what do we have? We got mortgage stuff, 6 a.m. Central. Bigger than that, but I don't think it'll be earth-shattering market moving unless it comes out like blistering hot. You have the producer price index, and you have retail sales. So, and with producer price, you get the headline and the core. So what I will be watching at 7:30, 1 hour before market, 1 hour before the equities open. Core PPI forecast to be 0.2, consensus is 0.1, prior was 0.4. If it's higher, like coming in that 0.4, even 0.3 range, could be minorly interesting. Excuse me. The PPI, just the headline number, month over month, is forecast to come in 0.1% contraction, and previous was 0.3. So unless that comes in at like 0.1 or 0.2, it won't really be much of a thing. But that's the only risk, is if this comes in at forecast or anything, it's going to be not much of anything going on. Then we have Bostic at 8. Industrial production, very minor number at 8.15. Bullard, 8:30, so we're ramping up with Fed speaky. What else? Business inventories at 9. Fed beige book at 1. Harker at 1. So there you go. And Logan, right at the close I should say the closing bell for the futures, not the closing bell for the equities. Remember, futures close at 4, equities close at 3. So we got a lot of Fed speak ramping up. Ramping up. Let's see if they're on the same page, if they're chatting in unison about stuff, or if we get a lot of different things that they're saying in relation to how much more the hikes will be, what they are hinting at in terms of pause, just like Barkin's saying no pause until it's convincingly at target. Well, that would mean to me, if it's convincingly at target, that's around that 2%. So are you not going to pause until it hits then? Interesting. We'll have to see if that's brought up by anybody else. Market map. Tesla was on the tear today. You have the trial in San Francisco starting for the 420 funding secured. What else? So that was a major. That's what held up. That's what propped the S&P up today. Apple minor, everything else. Amazon pullback. Banks are again taking it down a little. Besides, where's my Morgan Stanley in there? Where was that? I'll have to look that up. But Morgan Stanley, Goldman, pretty decent pullback. Morgan Stanley rallies. What else? Chevron up nicely today. Basic materials still getting the pullback there. Technology, everything sort of mixed today. Technology was the only thing that really sort of outperformed to the upside. Fed watch 93% for that 25 basis points, still solidly in greed mode. After the close today, we had United, which was a beat and is up after hours. Tomorrow morning, nothing really big. Got PNC, Charles Schwab, but nothing that's really going to move the market tomorrow morning. The biggest thing is that PPI number. Then after the close tomorrow, again, there's not a lot that's really going to move the market. It's going to be interesting to see with Discover, with their loss provisions and what they're doing in terms of that. And you got Alcoa. So let's see. I see Sterling's in here now. What a chop fest. Back and forth today. A lot of this Bitcoin was driven by a massive wash trading again. This is why it's still garbage. Boy, I can't wait till it gets all the stuff gets washed out of there. We'll take a look at the Dow. Acting controller of the currency, too big to manage. Banks may need break into smaller pieces. Oh. But if they're too big to manage, are they too big to fail? Or did you come to a rescue when they topple over? Large banks tend to assume that problems are caused by bad Apple. What? That means they all own Apple stock? What? Not systemic issues. I was making a joke about Apple stock, by the way. All right, ignorant statement. Coco, you've won the ignorant statement. Market will go up no matter what. That is an ignorant statement. No matter what. So we just have green days from now on? No matter what? Again. Unless we have World War III or something major? So it's going to go up unless we have World War III? That's your baseline for things tipping over? Wow. Good luck with your portfolio. Yeah, the Fed does love to speak. We see inflation coming down to about 3% by the end of 2023 and about 2% by the end of 2024. Okay, so there's still potentially what, about 2 years off from back to the Fed's goal? So what does that mean in terms of the pause? All right, let's get into. Oh, I had Crude up because I was just keeping an eye. We had to look at this little pullback. Boom, boom. Now, yes, this from a trailing perspective is a really nice potential double top. Remember, it doesn't have to trigger. But from a stop trailing perspective, now that would be the farthest away one I'd be keeping based off this. How many day run do we have? How many green day run? 1, 2, 3, 4, 5, 6. And 7 of the last 8. Crude has been on a tear. So, would that be a major topping pattern? No. It still stays above the very key level. I'm going to flip the harmonics around right for now. Right for now. There we go. Look at that key level right at that 50% level too. So still watching. We actually might confirm this on the next push higher. Confirm for a trigger needs the daily close above there. Let's see. Let's jump back to the market. So you got a nice little pausing bar. From my personal trailing perspective, what I like to do is you get a close below today's low from any one of these bottoming things that's a really good trailing stop level. That's pretty much the most conservative. So a close below today's low. More aggressive is still early warning overnight is 4,000, but then we break below 39.92, starts to put in more of a significant topping pattern. Is this a double? No, it's just a mess. But it can be traded below 4,000 to a quick trip to 39.92, then possibly 39.81 on a pullback. Again, tapping on the 62.5, finally tapping on it, but no close above it. So, and remember, we don't have any major topping pattern. Even a pullback to the daily rotation zone is just a normal pullback for the time being. So, for all the super bearish out there, we don't have a super credible topping pattern yet. But we have waning momentum with overbought conditions, and we could easily return to the daily rotation zone area. So that's why it's a trail mode for me. Not trail mix, trail mode. The NASDAQ, pretty much the same thing, with the farthest stop away for me would be below today's low. Choppy day, but not topping pattern. Now the NASDAQ, the area I'm watching is 11,530 for a breakdown. However, it has to be fairly aggressive because 11,478 support, and then we get back down 11,478, and then major support is about 11,400 to 11,410 to reconnect with the 50, which we paused at back on the 9th of January. Pausing bar, blasted through, retested a couple times. So this is now a support area with the rising rotation zone. Again, no major topping area. That's why it is just a pullback for now. We had somebody ask, is there a head and shoulders or a cup and handle? Not really. Your key thing to watch on the Dow is if it starts breaking below 33.9. Below 33.9, you got a target of potentially about 33.6 to about 33.7. And this was a pretty bearish day in the Dow with an outside And now I'm just watching where it closes because this would be a major outside key reversal if it closes back below 34,006. Currently trading 33,999. Why is it significant where it closes? Because when you get an outside reversal day closing below the prior day's low, has much more significance for a continued pullback. So, where would that continued pullback area be? Yes, this is going into a clear path move on the daily. The little key area on here, though, is around 33,790, then 33,7, then 33,627. So that's where we sit. Let's see, I can't catch up yet on all this stuff. Let me get through some of these and then I'll get back to the comments. Russell, nice little pausing bar here. Stop is below today's low from a longer term trailing perspective. 1, 2, 3, 4, 5, 6 bars up and a nice pausing bar with cycles at the top, overbought. Now, is that a major topping pattern? No. But I will be watching for a reconnection with the daily rotation zone. Again, sorry, was about to sneeze there. Again, I'm keeping an eye on this 4-hour rotation zone. We start getting into that. The real breakdown area starts coming below about 1878 into a single clear path. So the little target, the interesting target could be a pullback to about 1857. The DAX. The DAX still trying to march higher, still trying to close up. Now this so far, we've got a rounding top, but key support, if it does roll over, is coming back at 15,000 now. 15,000 is some major support. Again, market's in full-blown rah-rah mode. Don't have any good minor targets yet. I mean, we're going into this really choppy area. 15.4, 15.4, 15.525, and then 15.6, then 15.718. There's a lot of overhead resistance in here. That's why this thing will probably need to reload before an attempt to even get through it. The notes pulling back to the rotation zone. No great setup just yet in the notes, so it's hands up. The only thing is I'm watching for a rotation up above 115.16, and then it's in target of, with a tight stop, a target of the 200. That's it. Pull back below today's low. Key support still coming in at 113.28. Other than that, waiting. Now, dollar index. Yes, this is an inverse head and shoulders. We don't have a break of the neckline yet, so these are estimated targets still. And if it rotates back down and takes out this bar's low, it's off the table. So we rotate back down to about 101.53. It's done if it doesn't trigger. The aggressive trigger is the neckline. The conservative trigger, another thing I've been working with, haven't taught much about it, is this shoulder, the right-hand side. So if you want the aggressive trigger, it'd just be the neckline on a closing basis, and that needs a 4-hour closing basis. A 4-hour closing basis above the neckline. The conservative trigger is 102.23 on a 4-hour closing basis. And we'll know the targets where it breaks the neckline, but for right now, it would just be returning, potentially. These targets can change, but into the daily rotation zone, so it's slightly lower probability, and to the major breakdown zone where these two bottoms came in. So is this a major bottoming pattern? No, it's a minor bottoming pattern with daily cycles turning up. But it could be rather nice with daily cycles turning up, with some waning momentum. So that's definitely something from my perspective to keep an eye on. Crude, we already looked at. Besides this little mini double, that's it. Again, I would personally will not be rushing in to trigger anything off of the close because of the cycles at the top and overbought. I think there'll be multiple chances to get into this kind of pattern. Natty Gas still trying to put sort of getting into a rounded bottom mode with divergences, but not a great buy setup yet. Gold, pullback. Again, it's trailing. This now, I'm watching for a reconnection with the rotation zone, at least. So this would not be initiating something new just yet. Copper, outside of this is an interesting pattern. Interesting in copper. Quick little outside reversal. Look at the daily. Outside bar. Breaking below these two key low areas. Coming back down close to that daily rotation zone. And then closing at the highest close above those 2 bar pullbacks. That is a... I mean, this thing's overbought at the top, but that is a pretty bullish short-term pattern only. So going to be watching for an eking out of a little higher. Remember, our key targets are right up here. Key targets have been in place since October. The 10-year bonds, intervention, slapping it back down to 50. Remember, Bank of Japan meeting on the 18th. That is tomorrow. Yen, nice little pullback today, but really a pause day before the Bank of Japan meeting. Euro, watching, it's pulling back to that rotation zone, but we start breaking. But I'm targeting a pullback to about 107 area. And we have Bitcoin still pushing higher. Well, at least we can flip the harmonics around now. So that's where we sit there. Tesla, then I'll get back to comments. Pushing above the daily rotation zone. So still going to watch for some more potential follow through unless we take out today's low. The more potential follow through. Minor levels for stop raising 134.16, 137.75. Key level is 140 to 141. All right. One in every three of the 535 senators and representatives in current U.S. Congress have received campaign support from one of the senior executives at FTX. Well, they were spreading around the money, weren't they? Mike, we know the Fed affects the 2-year side of the 2-10 yield curve. Economic faith affects the value of the 10-year. Which variable in the yield curve equation will make it move up to 0? Well, I don't know yet. That's the honest answer. I think the 10-year has gone back to full-blown complacency. Okay? I think the 10-year's underpricing stuff and the pricing more of... What's interesting is the 10-year, to me, is pricing much more of a Fed pullback. So, we have... I think the 2 years got to keep rising if the Fed keeps hiking. And then if it pauses, it's roughly got to stay at a slightly higher rate. So, does the 10-year then get to play catch up? That's my question. And again, I don't really care. Why don't I care? Because it doesn't matter how it gets back to 0. The rapid steepening is what matters to the markets. So could that steepening also happen? Could we get to where the Fed, screw pause, we're going into pivot mode and we need to cut, in which case the 2-year starts collapsing and the 10-year holds firm? You could have that side of the occasion. And if the Fed has to pivot and start cutting, that's when it could get very interesting, because that means the markets aren't good. There's a lot more weakness than they expected. And the recession would have to be not just a mild one, would have to be tipping into severe. So either way, either way, the key on the trade is the acceleration back to zero. That's when equities can take a pretty substantial beating. Intel, yeah, okay. I was already a supporter, new credit card issued, and I haven't updated it. Love this channel and community. Well, thank you. On a daily, what was that for? What did you ask before, Connor? YM have a cup and handle on the daily. Well, this would sort of be a reverse cup and handle, which isn't really a pattern. If you get another dip and another run up, I'm already just going along with the other harmonics anyways. So, I mean, if the markets stay in la-la mode, the Dow could easily go back. I would not be shocked to see the Dow eke out a higher print before the next collapse, given it's only 30 stocks. Where do we sit? If you don't mind canceling and reopening credit cards, you can walk in on the red carpet as often as you want. Have you guys figured out a way to game something? Bitcoin is just short squeezing along with the other junk. What's your thoughts on coin short through earnings? I think Coinbase, when we get in the next key rollover, I mean, the only pattern we had was that double, and then it's just considered. I'm watching for another topping pattern. I think we'll get another rollover play in both Bitcoin. And it hasn't just been short squeezing. There's been a ton of shenanigans with wash trading again to pump it up. So whenever I start seeing that, I'm expecting something bad to happen. It's trying to give itself a cushion. So yeah, I'd be watching for a topping play to come. Can this keep going? Yeah, as long as the markets, even on a slight little pullback, as long as the market's in go-go juice mode and crypto's recovering, yeah. But I'd be watching for a more significant topping pattern before earnings. Good evening, Charles. Any thoughts on the Hoffman inventory retracement trade with regards to the copper daily? Not specifically. I think China will throw a wrench into all this. Their reopening is suspiciously timed, in my opinion, to drive up energy costs and likely inflation here in the U.S. That's why I'm not as tame on inflation. It's not just crude. I mean, one of the reasons copper's going to the upside is because of China. That's why I think that all the stuff on inflation is just going to magically head down to 2%. I think a lot of people are going to be in for a rude awakening. It doesn't have to go back to 9 or 10%, but it could be stuck at an elevated area. Let's say it's stuck at 4.5 to 5%. Or we drop to 4, then we bounce back up to 5. You know, that sort of puts a kibosh on the little short-term narrative of inflation's going to go magically back down. So goods inflation could start things that matter. Copper plays a big role in a lot of things. And the timing is interesting. I think I already answered that. I'm watching for closer to the weekly rotation zone, Paul. Did the S&P 500 form a double top on the daily? No. There is no double top. In order for it to be a potential, it'd have to get above the 75 for this to even be a double top. And B, I don't think that's even going to... That would not work because this target is below here. So what would I, again, well, I talked about this, I think, over the weekend. What I'm watching for is if we do break below this 60, the major level is the 62.5. The early warning sign is 3,800 to me. The early warning sign to possibly get aggressively short into this 37.55. Below 37.55, the key target to me gets down to 35.90. I don't need this to be a double. Recently seen that when the Fed cuts is when the market takes a big leg down. That yield curve is already steepening. It's not steepening much. The Fed will, I think they could. I think something could break. But I also think something could break that isn't on people's radar screens. That's where we could get interesting. My philosophy, my theory is something will come out of, whether it'll be something that shakes the markets pretty bad. Could it be like China going after Taiwan? Could it be something, some other escalation? Could it be something on nobody's radar screen? Meteor hits Earth. I mean, then it's going to be like we have to cut. Then they literally have the excuse because it was an unforeseen event that shook the markets. Then they have something that they won't lose credibility with. Okay? So if we get one of those black swan events, you know, where the Fed can then, and the markets take a hit, the markets would have to take a hit. Okay, but it's like, uh-oh, something's breaking. Something's breaking. We couldn't have foreseen that one. Well, now we have to cut. But then they still have credibility because they can blame it on an unforeseen major event. It wouldn't destroy their credibility in their minds. Why? Because who could have foreseen that unforeseen event? So therefore, we have to take action because of an unforeseen event. That's how I think it could transpire. Just my personal theory. For what it's worth. It's not going to be the debt ceiling. That's going to be a whole bunch of hype to nowhere. They're not going to default. The government will not default. It'll become a political back and forth thing. We're gonna have to pay our bills. We can't pay our bills. How often? Yeah, you could even have a temporary government shutdown. Okay? Well, that would probably be a good thing. Let's just shut the whole thing down. What good does the government friggin' do for us anyways? It just makes more of a mess. So let's have a shutdown. You think the government's going to default on though they're issued like their bonds and their notes? It isn't going to happen. There'll be a blink way before that happens. For it to go to 35.90, there needs to be something breaking the system. No, I don't think to go to 35.90 there needs to be something to break in the system. That would still not even do a ton of damage. That would still be just in this huge range that's been carved out. You wouldn't need to break something to go for 35.90. Ball. VP takes over the presidency. I don't even know what that. I don't know if that's would do it either. I think that's planned. I think Biden will be given the old boot before the next, as the presidential race is heating up. What do you have? A ball triggered inverse head and shoulder on the weekly. It's really ugly. You can trade it like this. It's sort of ugly. I will put up the targets. So there you go. And the key target I would be focusing on is right around the second target. You got the 50, you got the breakdown zone. So there you go. Yep. It's reversing this move. There you go. Isn't that how it usually works? Everyone knows in hindsight, very few can see it coming. Well, that's why I think they need something. They can't. If it's just the standard stuff with, oh, oops, we put rates a little high and something's unraveling. No, see, then they're gonna look like idiots again. Same way they looked like idiots with keeping rates because they said they were going to keep rates. Remember, we're going to keep quantitative easing till March. All right, you couldn't change course? No, we said it. So, see, they've said it. I don't think they want to blow credibility. They need something to blame it on. It's 2023, and based off recent averages, we are 3 black swans? Wow. What do we have here? Oh, that was in reference to the VP. I was like, we got Dumber taking over for Dumb? It will get approved again at some point. It'll turn into a political theater. Come on. All right. Yeah, debt ceiling is always raised. It's just how much juice they can get out of it. Bond market illiquidity is rumored to drop. Not seeing that yet. Could it happen? Theoretically. Could there be something tied up in with still some foreign holdings of the bond market getting all dumped at once? Yes. Then it could get interesting. But I bet you that would be claimed as a black swan event. Is the retail sales ex autos what everyone will be watching tomorrow? It's mainly the headline number. The headline number is just it's more so the retail sales just month over month, which is forecast anywhere from 0.8, is in contraction, pretty steep contraction, But this is the headline number that more people and more algos will react to. So this is the one. That's the one that the more so you'll see on the HES. HES. Other. Not much. I mean, your short-term levels for stop raising. Would be right where it's pausing now. Next minor level, 154.50. Where are your major levels? I might have put that on the more your major targets still if the rally continues. Let me see if I got those. Yeah, I missed it. Hold on. 155. 152.43 where it's pausing. And yes, is this a potential double? Still, it is still valid. This is still one side. So, from a longer term, that's a fantastic weekly trailing stop level. Could it never materialize? Could you get a pullback and then another push higher, turning it into a triple? Yes. But from a longer term, you have a fantastic stop level. From a short term, that would be a way far off stop level. So it's still in bull mode. Just watch it up here with waning momentum and cycles getting to a toppy area. So plan accordingly in the short term.
I didn't get that.
Well, that's because I wasn't talking to you, Siri. All right. Apple's just returned to a major breakdown area. I'd be watching for a short-term top below being put in, especially if we start breaking today's low. But there's no major topping pattern just yet. So that's where we sit. I'm watching anywhere in here for another significant topping pattern. We don't have one yet, but this is just a return to a key breakdown level and to the rotation zone. Could it push through that and push higher? Yeah. So do we have a fantastic topping pattern yet? No. But we start getting back below today's low, and I'll be watching for at least a short-term pullback. I'm looking for stocks to buy that are far enough away from one-year prices and everything is up from the start of the year to where I can't make heads or tails of what's garbage. Patience. You don't have to chase. Salesforce. It's filled this other gap. There's still a gap left behind. I don't like a lot of setups right now, personally, and there aren't a lot of high probability ones. Be watching CRM for a pullback. Then if it resumes a nice up move, especially if the market gets above some of these key levels, like you get stuff like the S&P and the NASDAQ closing above their 62.5, CRM could be a nice play for a return to the area of about 160 to 163. That could be a nice longer term play if the markets trigger some more buy after their pullback, trigger some more buy patterns. You also have this gap up here that takes it right to that 50% harmonic. So if anybody's looking for a short-term play, CRM could be nice after we get to at least some kind of market pause or pullback. Right now it's basing. It is basing sideways correction, starting to dip over with cycles, waning momentum. So that could be an interesting play. Can I check NVIDIA? Where is this back to? I'm just curious. Yeah. Oh. This was sort of fun down here where it got. Remember to watch those reversal zones between the 50 and the 62.5. Just wanted to point that out before I flip the harmonics. Next, continued. Even a pullback doesn't really invalidate because it got the close above the 62.5. So next target area is back to 180, 177 to the high print of 187.90. Up in here, there's major toppy price action. Getting very overbought. Cycles at the top. In order to do some technical damage, though, it has to at least get a close back below about 163 before it's even wounded on this run. A slight pullback or a sideways correction does not invalidate anything at this point. We can keep an eye on that also. Where do I see ARC topping out? Well, it depends as long as we get stupid in the market. If this continues, especially after the pullback, if we go back into get through earnings season with not a lot of earnings technical damage, and this wants to make a run, especially if we get the closes above the 62.5, I could literally see ARC getting easily back into this high area from mid-November, somewhere between that 87.5 and 100, and reconnecting because this will keep coming down. That's in more of the medium term. In the short term, it's getting very overextended. So in the short term, I'd be watching back to about 34.60. But does that really crush this rally? No. At this point, the only thing that would tip the probabilities back would be back below 32.31 on a closing basis. And that will keep rising if this keeps rising. All right. With that, I'm calling it a day. That's a tough question. It depends on what else is around it and what's going on with the stock technically. It can be a indication of a key level that I would not ignore, Connor. But there's lots more that goes in. I can't answer that on a blanket statement. I would start looking into and consider that level in my analysis. But that would not just be, oh, look, we have a lot of open interest at the 45 strike on calls and puts. That's got to be something. It could be a short-term magnet area, but it also depends how far till expiration, what else is going on with the market dynamics. So I definitely consider it. I do look at option strikes, especially with large open interest amounts. but I would not make a sweeping conclusion from that because I have not found anything that is like, oh, we have to look at this every day if we have large open interest at key strikes. Now, going into like very short term, especially with monthly options, large open interest, like the Wednesday, Thursday, going into the Friday before monthly option expirations, yeah, I'll keep much more of an eye on that strike. What year do I think oil demand will start to decline? The only thing that's going to kill oil demand in the short term is or the medium term, is if we go into a significant recession. To really kill it. And it won't be due to electric vehicle sales. Good long-term triggered weekly double bottom in car. This is the last one. Yeah, this one. Yeah, and any pullback here. This is a nice technical pattern. This is a really nice technical pattern. That I tend to really like, no matter, it doesn't matter the time frames. I mean, it's more important on the higher, but you see how it formed this key high back in August, mid-August? Hit it once, pull back, hit it twice, pull back, hit it 3 times, bigger pullback, and yeah, now holding above that. As long as you don't really start a huge breakdown move, I mean, I don't even care if it pulls back to 44. All right, that's pretty significant. I would be watching for a pullback play at this point. But now this resistance area turning into a support area gets to hold. See, I didn't get that. Banning EVs in the state, why? Why? Because California is stupidly enough, banning gas vehicles? So I was actually having that discussion with my wife. What's the point? What's the point? I'm tired of all this, banning that. Can we get smaller government and get them to frig out of our lives? Somebody wants to buy an EV and they live in Wyoming? I mean, I don't think Wyoming's the most conducive place to buy an EV. Probably not even a Ford F-150 EV. But if you wanted to buy one, why does your state have to ban it? And don't tell me the electrical grid, because you need Wyoming is not going to be the forefront in adoption of EVs. But why do you have to ban it? Just don't subsidize it. It's just sheer stupidity on all sides. Get the hell out of our lives, government. You know what? Stop making all these inane, idiotic, stupid rules. Okay? And support the oil industry. You know what? You're telling me that I read that too. All right. You really think any amount of EV sales in Wyoming are going to hurt the state's oil industry? That's just idiotic pandering to the oil industry. Idiotic. This is what this kind of garbage we need to get rid of. And that's not, I could care less. I don't care if people buy. I'm not some EV evangelist. Look, I don't think it makes sense for a lot of people to own an EV. I actually think we should have put more technology into partially electric vehicles. If you watch The Future's Edge, I completely agree with Doomberg. And I've thought that for a long time. If you really wanted to try to make a difference in stuff, focus on plug-in hybrids. For a lot of people. You know what? Before Chevy killed the Volt, I thought that was, it was an ugly car and the design, but the concept, 50 miles on plug-in, and then you got a gas engine to kick in. If you need to go farther. Most people don't do 50 miles in a day. Fully charged, plug it in your home at night. If you need the extra range, you got the gas. I know people who owned them. They loved them. Hated the design. But guess what? They filled up once every 4 or 5 months. Fine. We don't care about you. That would be smarter if you really gave a crap about stuff other than this idiotic stuff. Well, everybody shouldn't have an electric vehicle at this point. And so if you haven't watched it, I know a lot of people are familiar with Doomberg. A lot of people subscribe. Excellent Substack. But if you haven't watched the last episode of The Future's Edge that got released on Monday, it's on this YouTube channel. Go listen to it. Bob and Jim interview Doomberg. So that's where I'll leave it. No, the Volt, not the Bolt, the Volt. Before the Bolt. The Volt, which had the gas engine and the plug-in. Partially electric. 1 horsepower lawnmower engine. So, all right, I'm done. Talk to everyone later. Bye for now.